Okay, welcome to the weekly outlook. We're going to start by going through the calendar quickly, see which ones we're going to trade, and then we'll move on to the charts. Okay, so we've got the trade balance on Monday morning as the first red alert there. We've got for China. Not really looking to trade that. We'll be keeping an eye on the Aussie dollar though to see how it performs. But the weaker trade balance due to come in there is probably going to cause that Aussie to fall further. 1:30 AM on Tuesday, we've got the Aussie dollar NAB business confidence. Again, looking to see if there's any improvement in that. It is a market mover. If it comes in better than previous, then we could see that Aussie rally up for a short period of time. There is quite a bit of pressure on the Aussie dollar though at the moment, especially against currencies like the US dollar. So I don't expect it to rally too hard, but it could be worth looking at cross currencies such as the Euro, Aussie. Okay, the pound CPI at 9:30 on Tuesday. Expected in at 1.4%, so slightly softer. Again, CPI is going to be the one that the BOE are going to be looking at to see if it's getting closer to the target, to whether they're going to raise interest rates or not. Obviously, the further away it drops from the 2%, then the less likely they are to be under pressure to raise rates. Euro, we've got German ZEW economic sentiment coming in. Exposed at 0.2. Data has been poor from Germany, expecting this to put further pressure on the euro next week. Again, Wednesday we've got CPI on China, probably will weigh on the Aussie again, but most importantly on Wednesday we've got the Euro. ECB President Draghi speaking, looking for the ECB to put in further QE. Obviously they are under a lot of pressure now to try and get this Eurozone recovery underway. They do need to do more. And the pressure is going to be on, and we'll just see if President Draghi has got anything to say regarding those aspects. The pound got the average earnings coming in, key to the economy to see how the underlying employment status is of the country. If it comes in higher, it shows that the quality of jobs is better. So this could be a point where we do get a rally on the pound. Employment claimant count change as well. Also related to employment. 1:30 got the US dollar core retail sales. This is expected to be slightly softer. PPI expected to be slightly better, but retail sales month on month expected to be slightly softer. So a little bit of mixed data there. Don't always come out as expected, these retail sales figures, so it'd be worth keeping an eye on that. But any weakness there could just aid that pound short-term rally. So be keeping an eye on that, looking at that pound US dollar trade. US dollar GDT price index coming out, obviously the dairy index, which is directly related to 7% of the GDP of New Zealand. We are falling down a bit in New Zealand, and the Prime Minister talking it down to 65 cents of the dollar. So I'm expecting this to fall over the coming months, and this could be something, the sort of data that we need to listen to see how it's going to go. Again at 7 PM we've got ECB President Draghi speaking again. Keep an eye on that one. Listen to what he's going to say. Any further hints towards further QE. Canadian dollar at 1:30 on Thursday. We've got manufacturing sales month on month coming in at minus 1.6%. Again, the Canadian did have good unemployment data come out the other day. Didn't really rally against the US dollar. Like that strength in the US dollar there really driving that currency pair. So that's probably not going to change until the US dollar changes. 3 o'clock we've got Philly Fed manufacturing index. Expected to come in slightly softer as well on the US dollar. Not particularly looking to trade it, but just be monitoring to see what the sort of figures come out as. Friday again we've got Canadian dollars core CPI. Expected to come in lower, given the Canadian BOC the excuse they need to keep that dovish tone. So not expecting anything there in the way of strengthening in the Canadian dollar, certainly against the US. And then we've got Fed Chair Yellen at 1:30. This will be key. A little bit of controversy going on about rate hikes at the moment now with the US, whether it's such a good idea or not. Evidently worried about the rally in the US dollar over the last couple of weeks on some of the currency pairs, how it's going to affect the global outlook in terms of the USA. So it's going to be very interesting to see what Janet Yellen's got to say there. It could be a turning point. We're certainly seeing some more volatility coming into the Forex markets at the moment. So these are key trading times. Okay, so keep your eyes open for the data and make sure you absorb it all. And obviously keep an eye on the videos that are appearing below. in the archives throughout the week on key events. I'll be adding videos nearer the times. Okay, so let's move on to the charts. Okay, so here we've got the Aussie dollar. First one we're going to be looking at is Tuesday's alert at 1:30. We've got Aussie dollar NAB business confidence. Aussie's fallen quite sharply. It's still been talking down by the RBA at the moment, saying it's still too strong. It's historically high. If we take it down to some of the bigger time frames and scrunch that up a bit on the weekly chart, you can see that it has in October 2009 it was as down as far as 6,000 or 60 cents to the dollar. So you know there's still quite a fair way for it to go for it to reach those sort of lows. If we take it down to an even bigger time frame there, you can see on a monthly it has been even lower than that, and in fact the sort of stable price around this you know around the 7.4 area. So could it fall as far as that? Then yeah, it could do. It's going to be data dependent. At the moment the interest rate on the Aussie dollar is fairly high, touching on 3%. If it's going to get much higher, then obviously the Aussie dollar, the RBA, sorry, are going to have to do something about interest rates, which is going to cause the Aussie dollar to rally. So we've got to assume that they're going to hike rates around about 2015, but we've got to keep an eye on that data as well between now and then to see when it's exactly going to happen. But at the moment we've got Chinese data weighing on the Aussie at the moment. So in the period between now and 2015, I would expect to see maybe a drop right down to this 8,000 level. Okay, so there's another 600 pips to fall there. We did touch on a new low for the back, you know, just from January. Just gone through there and started to retrace back. So again, we could look to see if that breaks through that 83630 level. But at the moment, in the short term, i.e. next week, we could look to take sell positions just on the pullback on this most recent downtrend on the 4-hour chart. So if we put the Fibonacci on there, okay, we're going to see where the market opens obviously on Sunday night, because this could extend down to that most recent low. But as it stands at the moment, we're looking at about 8.789 as a retracement level, and you can see there that there is a sort of a degree of support and resistance around there, more so at the 8.30 price that it broke through on last week. So looking for some pullbacks. You can see here there is a degree of support there as well, and here so it could be that when the market opens on Sunday that trend extends slightly and pulls that 50% level down to about this area. Okay, so this is where I'll be looking for entries, and that counts for all of the data that's coming out on the Aussie next week. Okay, so moving on to the next, we're going to be looking at the pound as well. Okay, so we'll look at the pound to see where we stand with this next week. At the moment, the technicals are on the downside. We are on the downward trend at the moment, although the fundamentals are bullish for the pound, and we have got buy positions at 16125. Also taking some hedging trades on this more recently. I do expect this to come down further. You can see we've got a bit of a mini head and shoulders pattern forming here. Possibly it's going to pull back up to this 161 area and then drop off again. When that happens, we're going to have to accept the fact that if it breaks out this head and shoulders pattern, we could well be on the way down to 15750. Okay, I'm planning on hedging it down to there, and then I'm going to be looking for that data to be improving by Wednesday, and possibly getting the turnaround. We have got a major support level at that 15750. If we take that through to the weekly chart there, you can see that this is at the moment we've just sat around this 50%. Okay, on the weekly chart, we just pulled through this 16,000 level. It's bounced back up there. It started to retrace back on that candle, and then we've got the 60%, 61.8% at 15,724. I do think we're going to reach that next week before we get a turnaround on this pound. So well, we're going to get those hedges underway and keep that. If it pulls back up to the entry price for the buy trade, then I'm going to be looking to maybe hop out of that and keep the sell open. But I've got to be cautious on that, because obviously the fundamentals are bullish. We are going to be raising, the UK is going to be raising rates in 2015, early 2015. So very important to keep an eye on all the data. CPI is the first one out, which is going to be important. And then obviously we've got average earnings index, which is expected to come in slightly higher at 9:30 on Wednesday. So again, this could be what turns the pound. It may only be short term. It depends on what's going on with the US dollar as well next week. As well, you know, we have got data out in the US, mixed as well. Some of it's going to be good, some of it's going to be slightly softer. So we need to be aware of what's going on. We've got Fed Chair Yellen speaking on Friday, which is going to affect the US dollar. You know, there is had a slightly more dovish tone on that minutes, the FOMC last week, but that was obviously written before the good non-farm payrolls came in. However, there has been discussions about the rally on the US dollar over the last weeks, and its concern on the global outlook and the recovery of the US. So I do think that we're going to get a bit of a more dovish tone from Janet Yellen than probably what the markets are anticipating by the end of the week. So I do think that we could well see this pound be pushed down at the start of the week and then start to rally by the end of the week. Okay, so keep an eye on that and look out for that turnaround midweek. Okay, so moving on to the euro chart. Okay, again, we've had that big drop from the euro all the way from that 14,000 level on the weekly chart. We know we've had these reprisals with various data that's been coming out, but you can see that quite clear trend line there on the weekly chart, and this one big candle here down the bottom where we've had that quite decent sized pullback out of respect to that 12500 level, really, and that's basically all it is. Okay, so we are looking for this euro to fall further, and I am looking at a target price of around about 121. You can see where this low is here back in July 2012. I do expect that target to be achieved over the coming months, but obviously this 12500 level is going to cause us a few problems, and you can see there with the bounce there of nearly 300 pips. So as it stands at the moment on the 4-hour chart, we can see there that candle is displaying some pullback, with it being green at the moment. Obviously it's going to be the only green candle since that drop at the beginning of October on the 4-hour chart. But what is likely to happen now is once it's back through that 12600 level, we're probably going to see that continue to fall down to the 125 fairly quickly during the course of next week. So looking for prices to get into that could be fairly immediate on Monday, i.e. around about that 12650 area. Okay, so we're going to go over to the New Zealand dollar. These are pretty well much with all the data we've got out next week. It's really pound, euro, and US dollar orientated. So it's going to be they're going to be the key ones that I'm looking to trade at the moment. I'm just sort of showing you the charts as a whole for the week instead of individual alerts, because they're going to change as those alerts take place. Okay, so New Zealand dollar, US dollar. It has found a bit of support around the 7.8 level at the moment. We have got the GDT price index due out on Wednesday, which is going to give us some more of a direction on this New Zealand dollar. Now, don't forget the Prime Minister has been talking this down to saying that the Goldilocks price is 65 cents to the dollar. That's over 1,000 pips away at the moment. We have got a long-term entry on this with a stop loss way up here, this swing high. So we're looking for that to come all the way down over the coming months. But as for getting into this on the short term, I would possibly be looking at taking a new low below that 7.8 level at the moment. You can see that, you know, that degree of support there, just slightly 15 pips below it, will give us an opportunity to get that locked in. And then if it does follow down and break that that recent support there, the late September, early October, then we'd have the opportunity to be in there in profit before it gets to that price. Okay, so I'm going to hold that position that we're in at the moment for the sell for the long term, but I will be looking to take shorter term trades on that as well, adding to my position as we break through that 7-8 level. Okay, that's pretty well much it for the week. So thanks for watching. Hopefully you can make some pips. Don't forget to keep an eye out on the archives. I will be adding videos throughout the week on high impact alerts, especially the ones that I think the currency that's going to move the currencies, and updating the currency pairs I'm looking to trade, so that you can keep a close eye on what I'm looking at, and hopefully make some pips off the information that I can pass over to you. Thanks again.